Good evening, traders. Welcome back to the channel. In today's post-market analysis for Thursday, the 13th of November 2025, we'll break down how a morning prediction of flat to positive played out perfectly. Nifty opened on a mild positive note, tested the higher resistance zone, and then cooled off gradually, exactly as anticipated in the pre-market session. Let's dive into the intraday action and see what the data is telling us for tomorrow. Market summary: Nifty closed around 25,884, down just about 0.04%, meaning the index stayed in a narrow range throughout the day. It opened slightly higher near 25,900, made a quick push toward the 26,000 zone, but couldn't hold above it for long. After that, we saw mild profit booking through the afternoon, with prices finding support around 25,850. So overall, the market perfectly matched our flat to positive outlook. Technical recap: let's break down what really happened on the chart. The early strength came from overnight global cues, which were mildly positive. Nifty faced its first major hurdle around R1, 25,951, where selling pressure emerged. The index stayed within the 25,850, 25,950 zone for most of the day, confirming that traders preferred to stay cautious ahead of key macro data. The low supports around S1, 25,801, and S2, 25,721, remained untouched, showing strength and lack of panic selling. Sector or stock highlights: on the sectoral side, we saw it and metals holding firm, benefiting from global positivity. Banking and FMCG stayed mixed, consolidating after a strong run-up. Energy stocks got a small boost thanks to rising crude prices. Top gainers of the day came from large-cap names showing stability, while mid-caps saw some mild profit booking after a stellar week. FIIDII or market psychology: foreign institutional investors, FIIs, were likely neutral to slightly positive, given the absence of heavy volatility. Domestic institutions provided support near 25,850 zones, absorbing intraday dips. This shows that institutional players are not exiting but are instead accumulating on every small correction. That's a healthy sign for the bulls as long as Nifty continues to hold above 25,800. Tomorrow's outlook: so what does this mean for tomorrow? The price action suggests short-term consolidation with a positive undertone. Here are the levels to watch for the next session. Immediate resistance: 25,951, 26,041. Immediate support: 25,801, 25,721. If Nifty sustains above 25,950, we could see a fresh breakout toward 26,100 to 26,150 zones. But if the index slips below 25,800, then we might see a quick test of 25,700 before buyers step in again. Overall view: flat to mildly positive trend continues, with the bias still favoring the bulls. Conclusion: so traders, our morning prediction of a flat to positive day was spot on. Nifty respected our technical zones beautifully, stayed within range, and showed strong support buying near 25,850. For tomorrow, keep an eye on 26,000, that's the key breakout zone for momentum continuation. And remember, in a consolidating market, patience pays. Avoid chasing and focus on high probability trades near the key levels. If you found this analysis accurate and useful, hit the like button, share this with your trading friends, and don't forget to subscribe for tomorrow's pre-market levels and insights.